Well, thanks for having me, guys. Really appreciate it. Thanks for coming. It's a pretty good turnout, I think, right? Sometimes I've done events like this, and clubs just can't get people to come. But Ross was telling me a little bit about the attendance thing, and it's a pretty neat idea, honestly. Well, anyway, regardless, thank you for having me. Really excited to be here. Talk a little bit about Fizz, entrepreneurship, and personal finance, and credit building, all that important stuff. So, here's the agenda for today. Talk a little bit about who I am, why personal finance and credit is so important. Then I'll dive in a little about Fizz as a product, as a concept. Talk about some ambassadors and payment opportunities for you guys. Then I'll field some questions, and then we'll move on to the free Chick-fil-A. There's a little QR code going around the room right now. If you haven't downloaded the app yet, do that. It's the first step towards getting your hands on some of those free sandwiches, which I know probably most of you are pretty interested in. Who here came only for the sandwiches back then? You don't have to raise your hands. Well, cool. Also, just like to say, if anybody has questions just during the presentation, I am totally down with just you interrupting and shouting out some questions. But if that's your stuff. Cool. Alright. So, my background. Like Stephanie said, my name is Sam. I'm Fizz's head of content. Fizz is a pretty small company. We're only about 10 people. We're a new startup. Founded about 3 years ago, launched the product officially in January. So while I officially am head of content, wear a lot of hats, product, marketing, growth, you name it. If any of you guys have ever interned or worked with a startup before, I'm sure you kind of know the deal. So a little bit about how I got into this position at Fizz and just the company in general. So back when I was in college, I'm 27, I graduated college in 2019. Went to a little school called Kenyon, out in the middle of nowhere in Ohio. Maybe you guys have heard of it. Majored in econ, but I became that guy in college who would help all my friends with their personal finance needs, but specifically credit cards. As you get to be a junior and a senior in college, a lot of people started, I get the question like once a week, like, Sam, it's time for me to get a credit card, like, can you help me? And I was always really struck by how people were really just starting from absolutely no information whatsoever. I got a lot of my experience just from kind of being that guy on campus. I'm sure some of you, being in this club, probably hold similar positions in your friend groups, as acquaintances, that type of thing. Anybody do that? Anybody help their friends with credit cards, personal finance and stuff? Love to hear that. So I graduated from Kenyon in 2019. I went to work for another tech startup called Smart Asset. Worked there on their content team. I did, just a lot of writing, a lot of content creation surrounding personal finance. After a couple years there, started looking for a new job. Found Fizz. It was really just kind of searching job websites and came across a company with a mission to be the financial ally of young adults. A company that was building a debit card for college students to help build credit. Given what I did my entire time at Kenyon, helping my friends out seemed like the perfect fit, and that's where I've been now for about 2 years. It's been really cool because I've gotten to see the company basically from their initial fundraise. They were a Y Combinator company. If anybody's familiar with Y Combinator, it's like a startup boot camp that you have to apply to get into. So from the very start all the way through to building the app and eventually launching in January, and all the way up to the point we're at now, which is we just hit about 6,000 users, so that's exciting. So yeah, that's a little bit about me. I'm head of content, but I do a lot of our growth. I do stuff like this, like going around talking to groups like yours on campuses around the country. I live out in LA, so I flew all the way out here to be with you guys, so I'm very excited, very committed, Yeah. So now let's get down to the nitty gritty, and obviously this is the financial club, right? What's the full name? Collegiate Financial Management Association, CFMA. So obviously, know you guys are familiar with a lot of these concepts. But who here, just a show of hands, who would say they're super 10 out of 10 confident when it comes to personal finances? Nobody? Come on, somebody's got it. Maybe a 9, like 8, 9? Come on, don't be shy, guys. Come on, yeah, there you go, 8, 9. Cool, yeah. I mean, it's an interesting thing, right? Because personal finance is super important. Everybody knows that. Yet, it's something that's really not talked about very much, right? It's a taboo subject. Families don't like to talk about it. Friends don't like to talk about it. I mean, how many times are you going out to a bar with your friends and like pulling up conversations about credit cards and banking apps and that kind of thing? Okay, yeah, you know, like maybe 1 out of like 30, right? But yeah, it's a super taboo subject, which means you get a lot of subpar outcomes when it comes time to actually take the ball into your own hands. A lot of people growing up, living in your parents' house, maybe not spending your own money, not working, just kind of like coasting and having your parents figure stuff out for you, or just not having to think about that stuff as much. And as you get older, it becomes important, but you don't really see the same thing reflected in school curriculums and like I said, conversations with friends. You're just kind of bombarded with ads for credit cards, and sometimes you'll see stuff about bank accounts, like when you're watching TV. Nothing all that revolutionary. And it's really too bad because, like I said, it leads to a lot of subpar outcomes. People go into debt. People make bad financial decisions. Like they mismanage their money. And really kind of the differentiating factor that I think about when I think about personal finance and credit is that when it comes to personal finance in general, a lot of times it can't hurt you too much to not be super informed. It's a pretty popular kind of, I'm sure you all know this, like, it's a pretty popular mindset to have to say, like, I have this amount of money, like, I spend within my budget, I don't overspend, like, I put money in my savings account when I can, and, like, just leave it at that. That's not really going to hurt you. Yeah, maybe you're not going to soar to new heights, maybe you should be investing money that you're saving, or maybe you should have, like, a different sort of budget. It's not necessarily going to hurt you, right? And I think the thing that's interesting about credit, that differentiates credit, is that not knowing about credit can really have a really negative effect on your overall personal finances. And that comes from 2 directions, right? One is credit scores. So if you don't learn about credit, you don't take credit seriously when when you turn 18, when you're in college, when you're younger, you can end up in a situation like a lot of people I know have been in, which is, they apply for a job when they get out of college, and interviews go really well, and then the job denies them because they say, oh yeah, we had to like check we had to run a background check on you, we had to check your credit, and you don't have a credit score, so we can't hire you. It hurts people when they try and get apartments with friends, like, moving out, trying to get approved for an apartment first time by yourself. Landlord's not going to approve you if you don't have a credit score. And, you might think like, oh, well, I'll just like live somewhere else, but that's the type of thing that, can cost you a lot of money. Apartments that don't require credit scores, often more expensive. Not getting a job, that's the difference between having a paycheck and not having a paycheck. So, that's the first part. And, the second part is that mismanaged credit is such a huge problem when it comes to young adults in this country. So, like I said, a lot of times people's first purview into personal finance and credit specifically is they see an ad for a credit card on TV or online. They get like a pre-approved offer in the mail. It's like 0% balance transfer, a bunch of words that, if you're not really familiar with personal finance, you might not even know what they mean. People open up that credit card, it's like, oh, I need a little bit of extra spending money. I'm going on spring break, or I spent all my money on something else earlier in the semester, like I could use this card. And thousands of people, millions of people across the country do that every year, build up massive amounts of credit card debt, and saddle themselves with debt for decades. There's literally people out there who built up big balances on their credit cards when they're in college and are still paying them back in their 30s and their 40s and their 50s. And it really is just a completely suboptimal outcome. Who here has a credit card of their own? Show of hands. Not through your parents, entirely on your own. Okay, that's pretty good. I like that. For those of you that don't, just somebody shouted out, why not? And I'm not being judgmental. I'm curious. Like, is it just like a not something you've thought about? Is it something that you've been kind of told not to mess with? I'm curious. Any of those?
I'm scared of it.
Scared. There you go.
Told not to mess with it.
Told not to mess with it. That's real. That's real. Anybody else? Any other reasons? Those are really the two big ones. But like tying it back, like I said, it's a very reasonable thing to be scared of, right? A lot of people go into debt. A lot of people screw themselves over for a really long time. But then, the other side of the coin is that if you don't take credit seriously, if you don't build up your credit score when you're young, you can run into issues when you graduate college, when you get older, and it comes time to do more adult things. So it's never too early to get started. Yeah. So let's talk a little bit about what credit is and why it's important. So credit score is a number, ranges from 350 to 850, that represents how good you are with money, basically. It is tied to loans, student loans, credit cards, personal loans, auto loans, mortgages. And basically, the determinant is somebody lent you money, how good are you at paying that person back? So, if you have a credit card and you pay it off, your credit score is going to be pretty good. If you have a mortgage and you pay your mortgage, your credit score is going to be pretty good. If you don't pay it off, or if you don't, you're like, open a credit card at all, or open any sort of credit building line of credit, credit's not going to be that great. Credit report is slightly different. I'm sure maybe people have heard of credit scores versus credit reports. Your credit report is what a lender, when they are deciding whether or not to give you a credit card, give you a mortgage, give you a car loan, is looking at. They're not just looking at your score. Score is just a representation of your credit report. Your credit report is the thing that gives more holistic picture of you as a lender. That's why I talked to a lot of people, and I was here yesterday talking to a bunch of kids around campus who were telling me, oh yeah, I started building credit through my parents' account. And while that's partially true, and you might see a number when you go check Credit Karma, if you've only been on your parents' account, you might see a number there. But the reality is that lenders are looking at your credit report, and if you open up your credit report, or if they open up your credit report and all it says is, hey, this person is an authorized user, they don't have their own account, they're not responsible for their own money, that's just, ultimately not the same. There's a lot of misinfo out there, so it's just like good little things, little tidbits like that to be aware of. So yeah, like I was talking about, good credit is really important and can save you a lot of money. I mean, even beyond just being able to get a job or get an apartment, kind of like like baseline stuff like that. A good credit score can make your life a lot easier, and it can make things a lot cheaper for you down the line. I'm sure not many people here are thinking about buying a house right now. But like stuff like car loans and personal loans. Oh, we got one guy. You thinking about buying a house?
Oh, just like not my percent.
Good for you if that's what you got on tap next year. But yeah, it makes your life a lot cheaper. The difference between a mortgage rate of 3% versus 5% is several $1,000s a year, and even like thousands of dollars per month. So it really can help you a lot as you kind of go through life, adult even. So something that's really interesting that, and I'll get into this about how Fizz kind of solves the problem, is that I think a lot of people out there in college, young adults, people who haven't gotten started with credit, haven't because it's kind of an inaccessible thing to get started with. It's hard to get approved. It's hard to know even what credit cards to try and apply for so that you will get approved. And on top of that, a lot of people think, oh, well, I don't want to apply for a card and then get rejected because that's going to leave a hard mark on my credit, and then my credit's going to go down even more. And it's just kind of irritating because where do you start, Like, I'm sure all of you in here who don't have credit cards yet, you're responsible, you're able to budget the money that you already spend. You're going to graduate from UMD, you're going to get a nice job and be able to pay your bills off. So why not? Why shouldn't the credit card company take a risk on you? Well, the reality is that they're all big legacy companies, and they make all their money off of people that already have established credit and who they can make money off. And frankly, they just don't see a market for people who I like to call you pre-prime, people that know how to manage their money, who are responsible, but just lack the ability to get started. And that's why credit building can be really hard, because those credit cards won't approve young users. And so that's really, I'll get into this more again, but this mission to be the financial ally of young adults helps solve a lot of these issues that surround credit building and personal finance. So another thing, I wanted to put a whole slide in this because it's important to talk about, is that personal financial education in this country is really, really bad. You know, clubs like this are doing a huge service, but most people don't have access to this type of thing. You know, it's also a socioeconomic thing, right? Like students are 8 times more likely to graduate with a good credit score if their parents are wealthy and making more than 200 credits per year. Like that's a huge difference. That's the difference between a massive leg up and not a massive leg up, right? And that's really that's not fair. That's not how it should be. It really underscores the importance of personal financial education because getting started early is really key. Another crazy statistic you can see here: average college student graduates with more than $2,500 in credit card debt. Does anybody here have any credit card debt? You don't have to, but yeah. It's an unfortunate reality, and it's something that Fizz is trying to push back against, right? Yeah. And third, I don't know if any of you can identify with this, but personal finance anxiety. It's a top 3 cause of mental health issues on campus. Like it points out here, most students don't have that formal personal finance education, and it really shows. Like from a mental health perspective, from a financial health perspective. There's a lot of shortcomings, and that is where Fizz comes in. Who here is feels anxious about the personal finances? I know I do. It's definitely a point of stress. Even if whether you're good at managing them, whether you feel like you're starting from zero, it's definitely a point of a kind of a point of contention, a point of stress, and that's definitely what we're at Fizz looking to counteract. So let's get to the good part. Let's talk a little bit about what Fizz is and how we are pushing back against all this kind of negativity and lack of information out there in the world of personal finance. So, Fizz is a debit card for college students and young adults that helps you build credit. Simple as that. So, the way it works is that you sign up by downloading the app, you put in some personal information, we verify your identity, and we don't check your credit, right? Because that's a really important part of helping young adults get started with credit, is not subjecting you to the kind of whims of a normal credit card company that says, oh, this person doesn't have any credit history because they're 19 and so we're just going to deny them and kind of throw them to the wolves. We don't check anybody's credit, so nobody gets denied. It's kind of perfect. The next step, we link to everybody's bank account. So the way a normal credit card works, if you're able to get approved, they kind of just give you an arbitrarily high spending limit. Some of you, I'm sure, are familiar with this, right? You apply for a credit card, you get a $2,000 spending limit, even if you don't have anywhere near $2,000 to spend every month, right? It's kind of how they get you. Credit card companies want you to overspend so that you end up paying interest and going into debt and paying them fees and just lining their pockets, right? And that's true for any big credit card company out there. Discover, Chase, Bank of America, all these ones that you guys have probably heard. So our solution to that is, instead of just giving people an arbitrarily high limit, we link to your existing bank account, and we give you a credit line based on how much you actually have. And that spending limit fluctuates based on how much you have on a daily basis, on an hourly basis, on an ongoing basis, right? So let's say you have $500 in your bank account and you sign up. You're going to be able to, we give you a spending limit portion of that. It's about 70%, so you'll be able to spend up to $380. I'm not good with quick maths like that, but, and then, let's say the next day you spend a bunch of money, bank account balance goes down, so your spending limit for the next day, keep you spending within your means, not overspending, not going into debt, none of that stuff. And the third thing that makes Fizz so great, right? Third thing, really part of the second bullet here, is that instead of like a normal credit card, which,
Yeah, I was going to ask if you don't charge fees or interest, and if it's essentially made so you can't spend more than you have, how does Fizz make any money?
Friend, this is a great question. Thank you for asking. So, let me get to that in 1 second. Just want to touch on this auto pay part. Normal credit cards, they have you spend all month. They give you a big limit, and you have to spend all month, and they say, all right, pay us back at the end of the month if you can. If you can't, you end up racking up that interest. You go, you get saddled with that, and that's how people get in trouble with credit cards. We have our daily auto pay feature, which means that you go and spend $10 today, you go and spend $50 today, That money gets withdrawn from your bank account at the end of the day. You start every day with an accurately reflected checking account and $0 balance on your card. You're not building up big balances, you're not going into debt. It functions just like a debit card, but you're able to build credit. Now to answer your question, so if you look at the balance sheets of any big credit card company out there, they make the vast majority of their money from what are called interchange fees. So interest and fees for them, like normal fees that they just charge customers like you guys, there's just a cherry on top. That's just them lining their pockets. There's an entire business model out there, which Fizz works by, which is only subsisting off of interchange revenue. Now, does anybody know what interchange revenue is? Yeah, show hands, no? Wow, okay, well here we go. This is the big reveal then. So every time you go and spend money anywhere with a card, the merchant where you're spending money, McDonald's, Looney's, wherever you're going, has to pay a percentage of that purchase to MasterCard or to Visa or to whoever issues the card. In Fizz's case, we're a MasterCard. So MasterCard takes like 2 to 3% of every purchase you make. And that's why sometimes you go into places, they have credit card minimums or they charge you like 2% extra for using, or they give you a 2% discount for using cash. That's because of interchange fees. So what Fizz does, we take a percentage of that percentage, and that's where we make all our money. It's really as simple as that. Yeah, I mean, does that answer your question or anything I can clarify further? It's, it might not seem like a lot, right? Like only like a percent or two of every business. But when you think about, like a room full of you guys all using your Fizz cards, campus full of people all using their Fizz cards, a country full of people all using Fizz, those numbers stack up really quickly. And I mean, it's the whole reason why MasterCard and Visa and like American Express are worth billions and millions of dollars, because they make all their money off of interchange. They're basically just big payment processing systems. And for what it's worth, there's kind of like an interesting economic argument to like who ends up better off there, right? Like, in theory, the idea behind having payment processors like Visa and MasterCard is that you can spend money in more places and you just like have more kind of volume and economy. But it's been very kind of studied that and shown that a lot of those fees do get passed off to consumers in the form of like higher prices. But again, that's kind of like a more theoretical economic argument. At the end of the day, Fizz makes all of our money off those interchange fees. We don't charge you guys a cent. It's entirely charging the people that you're spending money on. Starbucks, Chick-fil-A, you name it. And then, the fun parts, right? The great thing about Fizz is that it helps build your credit right off the bat. So we report to all the 3 major credit bureaus, just like any normal credit card does. We do it on a monthly basis. We report all of the metrics that are normally reported: credit utilization, age of your account, payment history, which is really the important one. And yeah, question.
You mentioned credit utilization.
Yeah.
How does that get reported if it's so variable to how much you have in your bank?
Right, yeah. So you have an underlying credit limit that we issue like right when we give you the card, right? Right when you sign up, you get a credit line. It will vary month by month based on how much you have in your bank account, but it'll only, like, if you have, let's say you have a low credit limit to start out because you have less money in your bank account, we offer increases once a month based on your average daily account balance the month prior. So, people can like build up as they get more money. But you have a set underlying credit limit that is underneath that like daily spending limit that I was talking about. And so that number is the denominator of credit utilization. And then what we do is we take an average of all your daily purchases throughout the month, and that's the numerator of that like equation. So if you spend an average of $13 a day and your credit line is 12 or like 120 bucks, then it's 13 divided by 120 is your credit utilization every week.
I know you said this doesn't count as a hard inquiry, but does this count as an actual account on your credit report?
Yeah. So that's the neat thing about Fizz is that like underneath, like the rails are essentially entirely a credit card. It's an unsecured line of credit. It's not a secured card. It's not a co-signed card. It's an unsecured line of credit, just like a Amex is, just like anything. So it counts fully as an account. We just don't check credit because it's not. We want to be available to everybody, even if you haven't started building credit yet. We don't want that to be kind of the limiting factor. And then really like the second part of bullet 3 here, the really fun part is that we offer really great cashback rewards around campus. That's my favorite part. You know, every week we do all sorts of offers. Last week we did a 100% off offer at Chipotle, and this boba tea place around the way. Does anybody know what that's called? Like Dom Tea or something? Yeah, that place is good. And yeah, so that's like another part of our competitive advantage, right? Is that, you know, your normal credit cards that if you can get approved for as a student, like they'll offer a 1% cash back maybe, but this will offer up to 100%, 25%. You can even pick a monthly rotating category to get 3% back in. So.
This might be like a dumb question.
No, hey, there are no stupid questions. I'm serious. No
So if I had like $0 in my bank, not saying I do, but if I had $0 in my bank account and I was just use the card but did not ever use it,
Yeah.
could that, I would think, so you guys don't like, yeah, so I wouldn't be able to use it for the day basically if I had no money.
Yeah, if you have no money, because we're taking that spend limit, and it's a proportion of how much you actually have in your bank account. So if you have $0, then
Okay, yeah, I was worried about like overdraft or anything.
yeah. So yeah, that's the other thing. Like we won't like we won't let you spend more than you have. But if in this situation where like I guess let's say you went and spent a bunch of money and then like drained your checking account, like we wouldn't overdraft your account because we don't even try and initiate payments if you don't have adequate balance.
Okay.
So yeah, we have all of our bases covered. Want to make sure everybody's doing okay. Like, yeah.
Let's say you have multiple different cards that are a credit card that you need to pay back with X amount of with the bank account that you put with your credit card. If you pay back this extra other card and then your bank account balance also changes, it also affects your Fizz card's amount you can spend on your Fizz card.
Yeah, it's always based on how much you have in that connected bank account. So maybe you take out $20 cash to buy something in cash, like it'll change just based on how much you have in the bank account.
Can you connect multiple checking accounts to the card? And if so, how does it determine the balance based on those multiple accounts?
Yeah, so you can't right now connect multiple checking accounts, but you can connect savings accounts to give you a higher limit. We won't pull from your savings account because it's a weird like banking regulation in terms of how many times you can withdraw from a savings account in like a statement period. But yeah, so that's like something that a lot of users do. It's like maybe because I know I do this. Like I keep a lot of money in my savings account or investment account, and not a ton in my checking account, just because like would rather be like earning interest on that. And so yeah, you can connect savings accounts, and that'll make it so that your spending limit is higher.
So it combines that. If you had 3 different savings accounts, it would take the combined balance of it.
Yeah. Go ahead.
So a lot of like banks that hold like a normal credit card in have starting like credit cards that are linked directly to your checking account. Works basically the way Fizz works.
So those cards, well, for a handful of reasons. First of all, those cards all check your credit, right? Like any credit card that was the question, right? Like about a credit card issued by a different bank?
Yeah.
Okay, yeah. So all those credit cards will check your credit before you can get them. So a lot of times if you don't have any credit score, high likelihood that you're gonna get denied, right? Like also, those cards don't actually connect directly to your checking account. You pay them off via your checking account because that's just how you pay like any bill, right? Like just via your checking account. But at the end of the day, what makes this different is that we're actually linking to your bank account to see how much you have, to give you a smart spending limit based on how much you have. Like a normal credit card, from Bank of America isn't taking a look at how much you have in your bank account. You're just throwing them an application, they're running a hard pull on your credit, and then if they decide to approve you, they're just giving you an arbitrary limit based on like any previous credit history, what you say your income is, a variety of other factors that they don't necessarily share. But yeah, does that answer your question? I'm happy to go into more detail.
Well, I know that Truist, for example, has one that you don't need approval for, and it is literally linked directly to your checking account. Work basically that's the way the only thing it is. It just doesn't like show your credit score right there. You be smart. But otherwise, like, it links directly to your checking account.
Yeah. No, so I'm surprised I haven't heard of that. Is it a new product? Do you have it?
Yeah, that's my credit.
Oh, what's it called?
It's just like a normal credit, like Truist, like starting credit card.
Truist
It's fairly
Starter.
cheap, though.
What did you say, sir?
It's like just a normal like starting credit card for Truist, like your checking account. It's easier.
So is auto pay better the day after, or is it just automatically?
It's like 3 a.m. the day, I guess technically next day. It's like later, it's like after.
Like, if you say this thing gets paid automatically, so you said if you spend, then you, let's say you take stuff out of your checking account, and let's do something that, and I'm trying to figure out how that would work with the auto pay thing if it was left in there.
Sorry.
So let's say you purchase something and then you take money out.
Yeah.
I'm trying to, oh, I'm guessing you just walk in, okay.
Yeah, I mean, at that point, yeah, if we tried to pay off your purchases automatically, we couldn't, then like, yeah, your card would get frozen and say, hey, make a payment, and then continue using your card. Yeah, so that's like another way we keep you from spending, like building up a big balance, because a normal credit card doesn't know how much you're withdrawing from your checking account. They're just like spend, 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 and then, you know, maybe pay us back at a later date. Yeah, so, you know, to continue on here, like, our market is you guys, which I think is really great because, like I've talked about a bunch already, like personal finance is really important and it doesn't get nearly enough just press, you know. Like there's a lot of users out there. There's a lot of spend out there to capture, right? Like college students, young adults make up a huge part of the U.S. economy, right? And only 16% of Gen Zers even say they trust their bank. So there's like this huge hole here where people are unhappy with their current financial products, which is why I myself think Fizz is so exciting, is because we're creating this product that doesn't take advantage of users and that is designed to help. I mean, like you can see here, no credit checks, no fees, interest, can't overspend, and awesome rewards. It's really like just awesome value prop. And always curious to hear anybody else's ideas. Email me, but like this is only the starting point too, because again, like this stuff is super important. It doesn't just stop with credit, right? Building credit and being responsible with credit is important, but like we want to take it to new heights, whether that's providing renters insurance for off-campus housing, launching like checking accounts, launching savings accounts, student loans, you name it, because it's important to remember you got to think about personal finance really holistically, and credit is just one piece of that. And this is like a fun slide that I put in. We partner with all these businesses, which I think is super cool because it just is another reason to use Fizz around campus. You get free Chipotle. That's better than like any other credit card you use. So. Well, cool. A lot of questions already, but happy to field some more. Let's chat.
Do you guys have any like fraud protection?
Yeah, we have 100% fraud protection, just like every other credit card does. Yeah. That's an important part of it because, I think if you don't have that, you're not, putting very much faith in your users.
So I guess the only downside is the time to pay with Fizz versus another credit card, because someone give you that extra period of time to pay.
Yeah, in theory, but I think that's kind of the idea of what we're pushing back against. Is that, normal credit cards, and even like just by your question, you can kind of get the sense that like it's so ingrained in our minds that like credit cards are this kind of, and I'm not saying you think this, I'm just saying like in the ether, like it's so ingrained that credit cards are like this tool you can use and like to borrow money and like pay it back later. And to an extent that's true like in the very short term, but if you want to borrow money, the worst way you can do it is with a credit card. Credit card interest rates, especially when you're a young adult, are like 30% a year. Like you can get a personal loan at a third of that. And so, it's just the whole idea that, you should be spending money that you actually have on stuff that you need without, going into debt and paying interest and like thinking about, oh, I'll buy this now, but then I'm going to pay it back later, which gets people into a lot of trouble. So they say that, and then it comes time to pay the bill, and they can't afford it, and so on and so forth, leads to that issue. Like half of college students graduate with that $2,500 in credit protection. Yeah. Any other questions I can answer, guys? No. Yeah, go for it.
You guys are like a new company, right?
Yeah.
How do I know you won't just take my bank account and just
I mean, how do you know Chase? Well, do
Well,
that.
they're built up companies, never increasing.
Yeah, but like, do you know? Exactly. I mean, at the end of the day, like, you're right. I'm a big fan. Everybody here has seen Inception? Yeah. I love that line at the beginning. It was like, how do I know I can trust you? It's like, you don't, but you can, you know? And like, I think like, ultimately that's like the best answer I can have to your question there is that like, yeah. And you know, like that on top of that is like, this is just so like near and dear important to everybody that works at Fizz. I mean, our three co-founders, Moritz, Carlo, and Scott, they all, well not all of them, but Moritz and Carlo are both international students that dropped out of college, dropped out of Harvard to build Fizz. And the reason they did is because, like I talked about earlier, like Carlo couldn't get an apartment off campus because he didn't have any credit. And you know, like all of us have been affected by just kind of the lack of personal finance education and like the lack of a system in place that really works for everybody, especially as you're just starting out. So like, yeah, you know, I'm just a face up here, but like, you know, you rest assured it's very, very important to us.
How do users connect their accounts? Do you guys use like a third-party software?
Yeah, so we use a handful of aggregators. Like if you guys heard of Plaid, we like using Plaid. There's another one called Teller, and then we have another one called MX. It altogether like encompasses, I think, about 92% of like retail banks in the country. Sometimes there's little like credit unions that won't end up working with us, but you know that's something that we work on every day to kind of push forward.
On your website, it says you work with Patriot Bank. Can you go into a little more detail about that?
Yeah, so like what Patriot Bank does is like they're a lender of record, right? Like they're the ones providing the credit. We're just a startup, you know, a venture-backed startup. So our venture backing helps, you know, keep the lights on and like, you know, pay for my salary, pay for like our marketing efforts and that type of thing. But ultimately, you know, we have 6,000 users. We have like over like $3 million of spend volume, and you know, so we're not putting that up every day, right? And so we partner with them because they're basically the ones supplying the credit. Yeah, that's a good question. Any other questions, guys? Questions about credit cards, credit, personal finance? Everything's on the table. Happy to chat about it all. Questions about Chick-fil-A?
It's not really a question, it's more of a comment. I like to hear someone, especially with students, right, because I know we don't talk about the time, but it's not as big of a deal with us, because some of the payments aren't like these big, like a car, how big these right now.
Wait, so say that
I'm
third party?
saying because like the big time period thing would only really matter for like the bigger payments, and I think for students, I think this is a good idea.
The big time?
No, like super big payments, right?
Yeah.
I can understand like that being a big deal, but because for students, I'm saying, I see the business model makes sense.
Wait, because your students, what, you're not
I
worried
know,
about
like,
like big
it's not
numbers?
like as, like, a lot of it's just that I'm thinking, right? It depends, like, just the type of purchases make it so paying back immediately.
Yeah, no, totally. I think that like ultimately it's a good point. Like, yeah, like bigger purchases are bigger purchases and you have to put aside more money for them. But really, you know, you should forget about the fact that like most people that are in credit card debt, like it's not because they went out and bought like 3 cars on their credit card. If you can even buy a car on a credit card. Like it's people who said, hey, like I don't have money right now, but like I'm getting paid next week, and so I'm just gonna put it on this credit card and I'll pay it back later. And then they go out later like, oh well, I had a rough day, so I want to like I'll buy myself another drink tonight. And like, oh well, it's my girlfriend's birthday, I want to do something really special for her. And then before you know it, you've built up this balance that doesn't happen when you use a card like Fizz, because you just don't end up in that cycle of like, oh wow, I have all this money to pay back, I almost didn't even realize I spent that. So definitely hear what you're saying, but don't discount the fact that it's the little things that can add up and make a real difference. Yeah. Any other questions, folks? Don't be shy.
Can you explain a little bit more about the rotating categories?
Yeah, for sure. So it's a new feature that we're pretty excited about. But yeah, so every month you get to pick a category. I think, I'll go off the top of my head, nightlife, experiences, subscriptions, grocery stores, restaurants, and transportation. And every month you get to choose one. All of the purchases that go into that category, you get 3% cash back on. It's really as simple as that.
What's nightlife?
What do you think nightlife
What is
is?
that like? What does it entail?
Like bars and clubs.
Okay.
Yeah. Any other questions, guys? So, wanted to share this opportunity with you guys, all financially minded. I mean, like, even if you don't say that you're an 8, a 9, or a 10 in terms of personal finance prowess, still, this is a cool opportunity we have for you guys. We have a great ambassador program. We have a number of ambassadors already on campus. You get paid up to $30 per person that you refer to Fizz. It's a great way to build your resume. We give free merch, and we also provide, calls with like myself, Carlo, like kind of like a, internship style experience, a little bit of a kind of like portal into the world of a startup like this. So cool stuff. Feel free to take a picture if you want of that URL there. You can also find it at the bottom of our website, which is just joinfizz.com or homedevelopmentfizz.com. But yeah, it's cool stuff, and you can get paid. So we'd love to have you.
The ambassador program sounds pretty cool, but some of us and myself on track to be graduating pretty shortly. Are there positions opening, or is that like?
Yes, for sure. We just did a big high, kind of like, end of the summer is a big hiring time. So we don't have any open positions right now, but like we're growing fast. We're a quick moving venture backed startup, which is always, and we're always hiring. So yeah, like this also isn't like specifically just for being on campus. Like if you're like I was talking about, if you're that guy with your friends who like knows how to get people started with their personal finance, started with their credit. Still a good opportunity for you, but yeah, keep an eye on our website. We we have the ambassador page, but also we have like just a normal careers page. So yeah. Well, thanks guys. Any last questions? Cool. All right. Thank you so much. And yeah, I'll stick around for a little while. If anybody wants to chat credit, ask any more questions, and